Hey everyone, welcome back to the Velocity channel where we talk about personal finance. We do more than just talk about it. We manage our money better. And this is the bridge to financial freedom. Now today we're going to be talking about credit cards and why cutting them up might not be the best idea. Now, before we get started, we want to just lay some groundwork here. Credit cards can be dangerous, just like fire, right? If not used responsibly. But if you're able to use them wisely, they can actually be a great tool to help you build credit and earn rewards. So without further ado, here are the 5 reasons why we should not cut up our credit cards. Reason number 1, credit cards can help you build credit. By using your credit card responsibly and paying your bills on time, we're going to show you an example of that. You can actually improve your credit score. This can help you get better interest rates on loans and mortgages in the future. Let's cut to that illustration. All right, just to show you how powerful credit cards and velocity banking is, we have 2 credit score examples that you could use right now in your life. Are you ready? Let's go. Let's say you got a credit score of 500 to 589, right? Well, listen, most likely you're going to have a $45,000 auto loan if that's 5 years, supposed to be 5 years, and that rate is going to be around 17.8%. That minimum monthly payment is going to be $1,137, and the total interest after you finish paying all of the loan off, $23,245 in total interest. Now that's just with a 500 to 589 score. Listen, don't be discouraged at that, because Velocity Banking is going to show you how that doesn't even matter. Watch this. Let's say you got 720 to 850, right? Almost perfect credit score. Well, your car is going to be 5.8%, right? Minimum monthly payments $865, and total interest is only going to be $6,890. Man, that's a big difference, isn't it? But watch Velocity Banking become the great equalizer. Watch this. All right, with the same credit score, right? 500 to 589, 720 to 850. We have the same credit scores, okay, guys? There's nothing up my sleeves. Let's say the same people, right, that owed that $45,000 on the auto loan, well, they have a MasterCard they need to pay off, $5,500. They got another auto loan, but, well, that's the same one, $45,000. Signature loan to pay off, $2,400, and a big old fat mortgage at $200,000. Now, it's the same. $5,500, $4,500, $45,000, $2,400, and $200K. The same across the board. But how long is it going to take them to pay off all of these things? All of them, not just the auto loan. You have more than an auto loan, right? Not just how long is it going to take them? 13.6 years for this couple, right? For this person. And 14.8 years for these people. Now, the credit score is horrible, right? I mean, you and I can agree. Now, I like using nicer words, right? This is more risky. How about that, right? So, let's just say that they have more risky credit versus these, they have less risky credit. But guess what? If you're using the Velocity Banking method, you're still going to be able to pay off everything at about the same time. Will you save more in interest? Of course, right? Because of the interest. But look at that. Wouldn't you think having a credit score of 500 to 589 would set you back like years? No, not necessarily. Not when you're utilizing the Velocity Banking method the correct way. Not when you know how to use your credit lines, when you know how to use your credit card, right? All right? And so that is the reason we should not only be building our credit score, but we should be able to cancel out that interest at the same time that we build our credit score up. Win, win, win. Reason number 2, credit cards offer rewards. Many credit cards offer cash back, points, or miles for every dollar you spend. If you use your credit card for everyday purchases and pay off your balance in full each month, you can earn rewards that can add up over time. Let's give you an illustration of that. All right, here we are. Credit cards offer rewards. Let me show you something. Just for using your credit card, did you know that you could be rewarded for it? Oh man, this is going to be interesting. $3,000 equals 3,000 points. Now make sure that you read your terms and conditions, because the large print giveth, but the small print taketh away. Watch this. 10,000 points you could have, right? Just for spending $10,000. You were going to do that anyway, right? And remember, with the 10,000 points, many times you get $100 off that $10,000 that you spent, that 10,000 points that you accumulated. Now, this is the point where I want you to think about something. All right? Now, if you're using your card as the velocity banking tool, okay, and you're using your credit card, you're using that as a new checking account, where's your income going to go? It's going to go inside of your card. So if you make $3,000, if you make $6,000 a month, guess what? Guess where it goes? Inside of your credit card. Do you have to worry about a minimum monthly payment anymore? Like, let's say your minimum monthly payment was $600 and you're stressing out about it, right? But if you use your credit card as your new line of credit, are you still stressed about that minimum monthly payment? No, you just pocketed $600 each month, okay? Absolutely. That $600 is yours now, right? $5,000 coming into the credit card, $3,000 going out, let's say. And that's the expenses. Whatever's left over is what's paying that credit card down. And guess what? You even get rewarded for it. Reason number 3. Credit cards offer fraud protection. Now, if your credit card is stolen or used fraudulently, you're not liable for the charges. This can give you peace of mind and protect you from financial loss. Let me tell you one of the saddest stories I've ever heard. Oh my goodness, folks. Do you see all of those zeros with the frowny face? I want to tell you about my friend who lost over $4,000 in California. He didn't even go to California. He doesn't even like surfing. He got a surfboard on his debit card. He was wondering what in the world's going on. Well, I'll tell you what in the world was going on. Somebody used your debit card and you didn't have fraud protection because you didn't have a credit card. You see, with credit cards, you have fraud protection. So that my friend, man, all he could have done was called up the credit card company, Visa, shout out to Discover, shout out to American Express, shout out to MasterCard. Now listen, if you got an American Express, that number starts with a 3. If you got a Discover card, that number starts with a 6. If you got a MasterCard, that number starts with a 5. And Visa starts with a 4. Absolutely. Comment below if I'm wrong. Absolutely. $4,000 gone because he did not have one of those master credit cards, because he didn't have a credit card. But he could have called up his credit card company and be like, hey, that wasn't me. And he wouldn't have to wait over 5 months to get his money back. I don't even know if he got all of it back. Use your credit card. Reason number 4. Credit cards offer purchase protection. Isn't that beautiful? Many credit cards offer extended warranties, price protection, and other benefits that protect you when you make purchases. This can save you money and give you added security when you're shopping. Folks, I know you probably already know this, but listen, did you know that you could accidentally spill coffee on your laptop or any covered electronic device, or even someone steals your cell phone? Did you know that you can have purchase protection? Now get this. Imagine, you're talking on your cell phone. Somebody just runs up, snatches the cell phone out of your hand, and takes off. All you got to do is reach the nearest communication device and be like, listen, someone stole my cell phone, to the credit card company. Call your credit card company up and be like, man, I'm so glad that I didn't rip you up. Could you go ahead and make sure that, I either replace that device or a reimbursement, please? And they'll be like, hey, no problem, sir. Credit cards. That's the power of credit cards. And when you use them correctly, they can not only build you credit, they can give you partially a peace of mind. Reason number 5. Woo! Cutting up your credit cards simply won't solve the problem. You see, if you're in debt, you're struggling with credit card debt, cutting up your cards aren't going to solve the problem. You need to address the root cause of that problem and create a map, right? Money allocation plan to eliminate that